Bonds and stocks are on a seesaw, and the Gulf Coast has seen its first tropical disturbance of the season. That's what we'll talk about in this morning's Backstage Pass. Good morning, I'm James Lopez, president at HomeFi Corporation. And yes, you heard that right. The first tropical disturbance of the season has moved in across the Florida and Alabama and Mississippi Gulf Coast. If you live in that area, like I do, and you're wondering where all the rain is coming from, that's what it is. This tropical disturbance formed over the Gulf of Mexico on Sunday evening and moved across yesterday, producing gusts as high as 55 miles an hour and a lot of rain. And that's going to move through the south the remainder of this week. And, you know, there on the Gulf Coast, we're going to see some rain. But that's what it came from. Feels like a real early start to the season. So listen, everybody, buckle up. Hurricane season's coming. And it's getting started a little bit early this year. Now, jumping into the bond market today, you know, bonds and stocks have been on a seesaw together. So towards the end of last week, as stocks were kind of, you know, going down, some would say even tanking, as stocks went down, the mortgage bond market was the beneficiary of that, bond market in general, and prices for bonds started to go up. And it's just been that kind of seesaw. So yesterday, stocks kind of made a little bit of a rally yesterday and were up. And the bond market went down. You know, mortgage to bonds went down yesterday. We saw some repricing for the worse throughout the day. This morning, stock futures are down at the time of recording, and so bond market's back up. So right now, the stock market and the bond market are a little bit tied to one another on this seesaw, just going back and forth. So as of this morning, right now, at the time of recording, mortgage bonds are up 23 basis points. The 10-year yield is down 7 basis points. And so what we'll expect to see as far as interest rates go is we should see interest rates open better today than where they closed off yesterday. And in this process from yesterday to today, statistically, mortgage bonds have set a new floor of support and a new ceiling of resistance. So what that means is that while yesterday we were kind of testing that ceiling of resistance and we had a lot of room to go before we hit the floor of support, today, because of how bonds have performed, statistically there's been a reset in the floor. And so now we're at the floor of support right now, and we've got a ways to go up for that ceiling of resistance. What that means in the long term is that this downward trend that we've been in on the prices for mortgage bonds could be starting to turn around right now. That's what we've been looking for, and we've been seeing it for a while, the potential for it. There's been many head fakes, but it could be starting to turn around. And if the trend right now will continue to level off, we could see a new normal as far as where the bonds are trading, and that's going to be good for interest rates. We'll see those interest rates level off, which is what we've been looking for, and then eventually we'll see them start to slowly drop as far as the interest rates. It's not going to be dramatic like the increase was, but it will. We will see rates start to fall. Now, that's yet to be seen. Today, there's not a lot of news that's coming out that's really affecting the market, except for the PMI. And no, that's not private mortgage insurance. It's Purchase Managers Index. It's a Purchase Managers Index, and it's just an index that comes from the manufacturing sector. And that data was pretty tepid this morning, and so that's kind of helped bonds rally. And by tepid, it was not a good forecast for the manufacturing sector as far as that data goes. The index showed that the feeling is that it's, you know, the next few months and maybe even longer are not going to be as good for the manufacturing sector, and so bonds like that, and mortgage bonds are also responding to that a little bit. Now, again, we'll see what the future holds, but if we can reset that trend, then, you know, we could start to see interest rates level off and possibly, you know, start to not dramatically drop, but start to fall just a little bit over time. And that would be good news for the housing market. Now, other than that, that's all the news that we have for today. I hope you have a great day. If you have any questions, make sure you leave a comment, and subscribe to our YouTube channel. Head over to Facebook and like our Facebook page. We release a lot of data over there, a lot of infographics, so make sure you check those out. And remember, stay positive. I hope you have a great day, and we will see you tomorrow.